Hello and welcome to Closing Trades right here on ET Now. Given up our morning gains, or at least that attempt at a comeback to that 18,200 fringe, which we did actually, but only for a brief bit. Now back to 140 odd points lower. So clearly hitting a pause button there. And you could blame it all on the HDFC twins, which are dragging our index lower. HDFC, HDFC Bank, which are pulling the Nifty down by a good 150 odd points. HDFC Bank now down 5.6%, and HDFC as well is succumbing to selling pressure. Having said that, the two stocks which are reacting to their earnings, that's TVS as well as Hero MotoCorp, they're definitely propping the Nifty Auto Index higher, which is now sitting at a 3-month high. In fact, a big beat when it came to Hero MotoCorp, and for that matter, even TVS to a fair degree. Tire stocks, they continue our buzz. That entire crude decline has aided, these stocks. You've seen the good performance from both MRF as well as CEAT as well. In fact, the CEAT management spoke with us as well earlier today. We're going to play a soundbite from that interaction stating that they do see robust margins and that they do believe that commodity prices have bottomed out, at least in the near term. So CEAT, MRF, JK Tyre, all these stocks are holding out a buzz. The earnings reaction, of course, is pretty stark when it comes to Federal Bank. That's been a big disappointment. That stock, even leading up to its earnings, yesterday was lower, and today is no exception. And that's pretty much the case with Symphony as well, which has seen a 4% decline in trade right now. But Anisha, can't take your eyes off from the HDFC twins, can we?
Well, yes, and if that was not the case, the Nifty would have perhaps been trading in the green, because these two stocks are the ones which are putting a lot of pressure, and that's the reason the Bank Nifty is also underperforming today. You have deep cuts on the Bank Nifty, 800-point slide, a cut of almost 2% is what we are staring at when it comes to the Bank Nifty as well. Though the broader market is holding out better, still the advanced decline ratio is favoring the declines, but it's just faring a tad bit better than what the frontline index is doing. Having said all of that, FMCG and consumption is bucking the trend today as well. So Titan is higher in the trading session. We pointed some of the auto stocks, but to add to that, Maruti Suzuki is also the stock which is holding up. And then you have names like L&T, Apollo Hospitals also doing their bit. But let's try and understand has the texture of the market and that buying on dip strategy changed for now or not. Kunal and Naresh are joining us. Naresh, what's your take? Does buying on dip still continue as a strategy, or it's time to hit the pause button?
So on the Bank Nifty, like I've been mentioning, it's a time to pause at 43,500 levels. We've dipped a bit from those levels, but on the Nifty, continue to remain positive. 18,000 should act as a base right now. Today, we are seeing a 145 point to 130 point cut on the Nifty. 150 to 160 points is the impact of the HDFC Bank and HDFC Twins itself. So overall, if you were to not see that sort of move, you would not have seen a fall today. So I would take it as a one-off day and wait for some pause. Say closer to 42,500, may look at Bank Nifty as well, and 18,000 is where would look at a buy on Nifty. But till then, it's a hold on Nifty and a pause on Bank Nifty.
Okay, so that's the take as far as the frontline index is concerned. Kunal, before we get to the market view and discuss, other things, wanted to discuss what's happening in IndusInd Bank as well as Federal Bank. Federal Bank, of course, is a result reaction, but what went wrong with IndusInd suddenly?
Yeah, I think there's a lot of actually selling pressure across the board for the banking stocks. So right from I think after the first half an hour, first 1 hour of the market open today, most of the large cap banking names started to go under selling pressure, and the selling has been very consistent. So this seems like more of a institutional based selling which is happening with these large cap names. I'm not sure the exact reason why these stocks are falling so sharply, but I believe that yes, the selling, at least looking at the screen, looking at the charts and the intraday volumes, seems to be on the much higher side. So just for an example, IndusInd Bank today has clocked volumes I think of around 60 lakhs, and the average volume over the last 2 or 3 days was around 20 lakhs, 25 lakhs for IndusInd Bank. So that itself tells you the kind of sudden increase the volumes have shown for the stock, for many of the stocks. And I think that's one of the reasons why most of the banking stocks have been under pressure throughout the trading session.
But will you be a buyer given the pressure, the sudden pressure? Would you look at buying anything?
So history has been of indication that whenever you see such kind of sudden sharp selling pressure which happens into stock prices, they tend to act as more trend reversals for stock, at least over the near term. So I'll wait out for at least another week or so before the selling abates, as well as the volumes drop down significantly to go for a contra buy.
What do you do with the HDFC twins? Do you buy this decline, or do you see further selling pressure come by?
Current selling pressure is more with the fact of MSCI. The last time the stock actually saw that big uptick when there was this expectation of MSCI based inflows was on 1550 to 1620 levels. So that was the spike last time, which was almost in November. Post that, the stock has done well, slowly and steadily. So I would expect 1600, 1620 as a zone where one could start looking at a small buying. And I don't expect it to break below that 1520, 1550 gap up mark, and which was also the low in March. So at 1600, 1620, the risk reward again becomes positive. The long-term structure is still very, very interesting because the 2-year return for the stock is zero. 1700 has been a problem point for, this is now the 6th time. The next time it breaks out about 1720, it could see a much larger move. So would look at an accumulated 1600, 1620 zones.
Okay, so that's the take coming in on HDFC Twins. In fact, a lot of financial stocks to discuss. So let's get started and talk with Mr. Pashupati Advani. He's joining us to make sense of some of the moves that we are seeing on the stocks today. Pashupati, let's start with the HDFC Twins itself. Yes, there is that MSCI, news flow coming in, which might impact the, inflows and outflows from the FIIs. But structurally speaking, what's your take regarding HDFC Twins?
As we get closer and closer to the merger, obviously the combination of the two will be more than 10% of the index. So I think that is something that everybody's kind of forgetting. And I think that, a lot of funds, except for pure index funds, but a lot of regular large cap funds are constrained that no single stock should have more than 10% in the index. And if you add the two together, it's going to be like 13 or 14%. So that all of a sudden we're going to see a lot of stock in the market. So that nobody's factored in. Now, overall, I think once that stock disappears and gets into strong hands, the stocks are doing fine. But again, you have the overhang from US of the banking sector generally. And I think that's some of that is coming into, is sort of flowing over and giving contagion to all markets. That's my thought on this, on the Twins.
That's about HDFC.
And I own them, by the way. So,
okay, so owning the HDFC Twins, but are you also owning Manappuram Finance? Because the stock has seen a sharp decline. And if you track Federal Bank at all, managed to miss the expectations by a whole lot when it comes to the NII figure.
So again, I'm actually not very comfortable with this sector at all because a lot of these banks, not so much the HDFCs, but the smaller banks have given money to fintech companies, and fintech companies have been giving loans based on, very little sort of less due diligence than probably they need to do. It's sort of Aadhaar-based loans. And, if you've done loans in white goods, you're probably going to have difficulty in recovering. So a lot of, even the large companies are quietly writing off. The ones that can't afford to write off are holding them and then defaulting back to the banks. So I think the smaller banks are definitely going to be affected because they've gone into that sector. Manappuram, I don't know what's going on unless they've had another gold robbery because they, I believe, were just doing gold financing, and gold at 60, at 62,000 or 61,000 rupees for 10 grams. There shouldn't be any worry of default risk there. So, but I don't know what's going on. And I don't own it.
Okay, so you don't own, Manappuram Finance at this point of time. But let's revisit of exactly what's happening in Manappuram, Pashupati, because there is the Enforcement Directorate which is taking the action against company and the company executives, it seems. Let's go across to my colleague Sameer to find out what the, latest proceedings have been. And then we'll get Vamakshi on board to make sense of what the market chatter is around Manappuram Finance. First, Sameer, tell us the latest.
More trouble for Manappuram Finance Limited because the ED has attached the assets amounting to rupees 143 crore of promoter Mr. VP Nandakumar. The entire case is that ED, the investigating agency enforcement directorate, conducted the search operation at 6 premises belonging to Manappuram Finance Limited, and even the premise of Mr. VP Nandakumar that was searched by the investigating agency. And during the search, enough evidence has been collected by ED that proves the point that illegally the cash or money was deposited by Manappuram Finance Limited, the agro farm of Manappuram, and this money was collected without following the proper RBI norms, without fulfilling the KYC norms. Now, the interesting part is that the ED also states that earlier RBI has triggered this. Earlier, RBI has directed Manappuram Finance Limited to return this 143 crore amount that was illegally collected to the customers. But during the search operation, there was no enough evidence, no document was found that could support the point that the amount was returned back to the customers. So ED collected enough evidence and also collected the digital data, establishing the point that this amount was collected from the customers without following the proper norms. And post this, the assets of Mr. VP Nandakumar, who is the promoter of the company, has been freezed in under the Prevention of Money Laundering Act. Under PMLA Act, the assets have been freezed, totaling to rupees 143 crore. And even Manappuram Finance Limited has acknowledged and has mentioned in the statement that yes, the equity shares held by Mr. VP Nandakumar that belongs to company, and this equity shares is of more than 19 lakh that has been freezed by ED. In addition to this, now ED is also investigating the role of CFO, the Chief Financial Officer, and several other officials of Manappuram Finance Limited, that how active role they played in collecting this amount illegally. And currently, the investigation is going on, and it is very likely that there will be more troubling days for Manappuram Finance Limited in coming time.
Okay, and even as these ED searches continue on Manappuram Finance, the central agency has actually frozen NBFC promoter VP Nandkumar's assets, including the 19 crore shares he held of the company. Let me take it across to Vamakshi and find out where things stand as of now. Vamakshi?
Well, yes, Manappuram in focus after the company announced that the ED has conducted a search at its registered office on May 3rd as well as May 4th, and this was mainly in reference to the deposits that were accepted by Manappuram Agro Farm, which happens to be the sole proprietary concern of the promoter. Now, as a result of this news flow, we did see that the stock declined by almost 20% in the last 3 trading sessions. So obviously there was a frenzy on the street as they believe that this case could be an overhang on the stock. But what are analysts saying? Let's get their take. Now, they believe that this could not have come in at a worse time for the company. The core gold loan business for the counter was anyway struggling, and that was mainly on account of higher competitive intensity in the overall industry. And this ED issue that has now cropped up is sentimentally negative for the company, and analysts believe that the short-term price movement will be driven by this case. But nevertheless, they do believe that the selling that has been seen over the last 3 days is quite overdone. Now, even when we compare to the consensus estimates that most analysts had, nearly 90% of them had a buy rating on the stock. But when we compare it to the price that was seen before this news flow of around 130 per share, the target price, the consensus target price, was anyway portraying very limited upside potential. So that was the news flow surrounding Manappuram Finance. Analysts believe that the short-term price movement could be driven by the case.
Thanks, Vamakshi, for putting that into perspective. But let's track some of the other price volume buzzers as well. You have Engineers India, which has hit a 3-year high on an intraday basis. The volume as well is 7 times the 20-day average. Yesterday as well, we had seen Engineers India surge as much as 16-17%. And today as well, the stock will come up for you on the screen is high by around 6%, hitting a 3-year high on an intraday basis and on a good amount of volumes, over 5 crore as far as the volume is concerned. Restaurant Brands as well has seen a breakout from the rounding bottom chart. The volume is 16 times the 10-day average, and those details should come up for you on the screen as well. That stock was high around 11% the last time I checked. And MRF from the entire tire pack is quite active. It's been forming higher highs and higher lows for 6 straight sessions and has hit an all-time high on an intraday basis. So very close to that 6-digit mark as far as MRF is concerned. 98,899 is where that stock is perched at this point of time. And other tire stocks, the likes of JK Tire, Seat, etc., they're also reacting positively given the earnings from MRF and Seat have been quite positive. Pashupati, your take as far as the tire stocks are concerned, and do you believe this expectation of a pullback in demand as well as expansion of margin is here to stay?
See, the question of tires, tires also, it's a new market as well as a replacement market. And MRF is actually, not, it's I won't say thinly traded, but it's not actively traded. It's not very liquid. But it'll be nice if it hits 6 digits, because I guess it will be the first stock to ever do so. So that is probably a reason for the MRF promoters to have a party, if nothing else. But, obviously there is demand for tires. There's a demand for vehicles which had been crunched because of lack of chips. The chip issue seems to be sorted. So now there are more vehicles. All of them are giving, good forecasts to produce. And of course, the replacement market is very strong as well. So, it's all good for them.
Tire stocks holding out. Kunal, this trade is playing out pretty well, right? For a consecutive session now, maybe all through the week or maybe more, you would be in a better place to answer that. they're going good, the crude sensitives, that is.
Yeah, the tire stocks have done reasonably well. Today, the paint stocks have started to show signs of breakout. I think till yesterday it was Berger Paints which was actually showing good strength. Today, you have Asian Paints as well managing to break past about or just come closer to that 3,000 plus mark. So that could be a potential breakout from the large cap space for the paint stock. So one by one, these sectors and these stocks, crude sensitives, are trying to play their part, and probably an indication that if the fall in Brent crude prices gets a bit more aggressive on the downside, you could actually see a higher probability of this breakout sustaining for many of these spaces. So even the OMC pack, so I think except for today's price action, which is a bit more negative, but I think net when you look at the 1 month price change for these OMC stocks, PPCL, IOC, HPCL, it's been remarkable performance for these stocks, showing signs of breakout across the weekly time frame. So I think this could be a trade which could last for some more time till the time crude remains to be into a downward spiral.
Okay, continuing with our focus on the auto stocks, you have TVS Motors and Hero MotoCorp which have been reacting to their earnings. So that has been well adjusted by the street. But what's the latest coming in with respect to the con-call commentary from Hero, and what has been liked by the street when it comes to the TVS performance? Let's take it across to Shrishti to help us decode all of that. Shrishti.
Well, yes, the street took it quite positively. The numbers from the two major OEMs in the two-wheeler space, Hero MotoCorp started the day higher by around 1%, but now it is trading near the day's highest point, and that's after the con-call commentary coming in from the management, because this time around the numbers have surprised positively onto the margin front, where the company says that a lot of cost-saving initiatives as well as price hikes, the RM cool off, all these factors help their margins. But going ahead, they do believe that there is still in headroom for their margin figure. Coming to the rural commentary, that also was positive by the company, because Hero MotoCorp, that company drives more than 50% of their sales from the rural market. There they are seeing tailwinds coming in, where for the month of May itself, they are seeing a catch up in the rural sentiment, as well as the marriage season is something that is boosting the sentiment for the rural recovery, and they are positive for the year ahead. Other than that, they expect FY24 to be a great year in terms of the new launches, and in the history of Hero MotoCorp, they say that this could be a remarkable year. Every quarter they are planning to come up with a new product launch, and that will focus on the premium segment. So that's the commentary coming in from Hero MotoCorp. And lastly, on to their EV, they say that now the focus is on the scale up, and from the setup earlier, they are witnessing a transition. They are planning for that. So Hero MotoCorp is that's the news flow coming in from that. But even the commentary from TVS Motors was very positive, because now the company says that they are holding over 30,000 of EV order book. They have expansion plans lined up, but from the EV space, the focus will be on the three-wheeler market as well, because from the likes of Bajaj Auto as well as TVS Motors, we are seeing that the race in the three-wheeler EV segment is getting tougher. TVS Motors has planned to come up with a product in the upcoming quarters. They have planned to expand this in the international market. They will launch more products once again in the premium segment, and they will further deliver better EBITDA in FY24 is what the company believes. So on the back of better margin profile, more product launches, we are seeing a buzz and a good uptick on both of these counters. Right. Okay, Srishti, we'll leave it at that. In fact, we're going to take a very quick break. Look out for Ambuja Cement. That suddenly spiked up. Not suddenly, actually, been a steady show, but now sitting at the highs of the day. About a 4% uptick coming in there. And of course, TVS Motors, that's your big star performer of the day. We'll take a very quick break, track the markets on the other side.
Welcome back. Well, 18,100 at the index level now. So, U-turn coming in for the markets at this point of time, not holding up at all. The Sensex also has taken a knock of almost 1%, and the Nifty Bank is the one which is down and out, cut of almost 800 points. There are a lot of result reactions as well, and Symphony is one such candidate, wherein the profitability slipped as much as 60% on a year-on-year basis, and this is despite a revenue growth of 11%, because the margins really contracted. The margins have actually halved to the level of 7.5%, and that compares with 16% that the company delivered last year. Pashupati, your take as far as the entire consumer durable space is concerned, because yesterday the numbers from Blue Star looked impressive, but today again you have Symphony disappointing with their performance.
I think consumer durables are going to have a little bit of a pause, simply because I think, people are looking at the real cost of money, and FD rates have gone up and they have to pay a lot higher EMIs for the same item. Now, whether that amount is paid by the manufacturer or the purchaser, that remains to be seen, but the purchaser is used to 0%. So now the question is, is the seller going to actually bear that cost, and that's going to eat into their margin. So I think there's going to be a little bit of pause while they get the public to come in and say, okay, we'll pay 2% or 3% or 4% interest rate. And then, these guys are getting money at, let's say, 8 or 9. And so they're able to, make the gap the way it was. So I think that's the reason why I think you're seeing some of the slowdown in that.
Okay. In fact, on the subject of consumer demand for ACs, they continue to be clearly strong, and that's the word coming in from the management of Blue Star. We chatted with him earlier in the day to talk about where they see visibility going forward, and here's what he had to say about demand in the sector.
FY22 gross margins were one of the lowest we've ever had. We were severely hit in FY22. So we had an internal plan. Of course, as always, we say price increases we will try and do, which we did manage to do in the first half of the year, but then we were not able to increase prices anymore. We have taken up a fairly extensive and large total cost management program in the company, redesigning products, taking out cost, repositioning products in the market, all based on our significant investments in R&D and innovation. So because of those, we were able to bring down our cost of the products. If you look at the quarter-on-quarter improvements, so for the full year, gross margins would have improved about 50 basis points. But if you look at standalone Q4, you will see a big jump in gross margin, about 2.5% to 3%, if I'm not mistaken. If I step back and I look at consumer demand and try and understand whether a room air conditioner is in their purchase set, I would confirm that, in fact, room air conditioner demand is very strong. I think as an industry, I think we closed last year at about 8.5 million units overall. We're all confident in the industry that we should grow by about 20% in the current year.
Okay, while we're still number crunching, Britannia's numbers are awaited today, as are many other mid-caps too. But let me take it across to Vinny, find out what the market is expecting from Britannia's performance.
Britannia is expected to post its Q4 numbers. In terms of growth, we're expecting a revenue growth of 15%. And this time also, we are expecting, Molly, that it's going to be like a pricing-led growth even this time around. Pricing-led growth could be around 10%, while we're expecting volumes to be at around 4 to 5%. So let's keep an eye on that one, because good momentum seems to have continued in terms of Britannia, in terms of demand as well. Let's watch out for commentary in terms of the rural growth and demand in terms of that factor, and what is it turning out in terms of the volume growth from the rural segment as well. Other than that, in terms of profits, we are expecting a 33% growth, while in margins also we're expecting a 200 basis point expansion in terms of the margins of the company. Pricing in terms of, obviously raw material prices, when you look at it, palm oil, that has seen a correction coming in, but sugar and wheat, that was a bit volatile during this quarter. So wait out for commentary in terms of that. But other than that, gross margins are expected to see an expansion because palm oil has corrected significantly on a year-on-year basis. That will obviously turn and come down to even the EBITDA margins, because price hikes are also taken by company. Premiumization also is a factor that comes into play as well for the EBITDA margin. So that is why we're expecting an expansion coming in terms of the margins of the company. Factors to watch out for: volume growth is going to be something that we're keeping an eye out on. Other than that, in terms of series that it has given to its companies, subsidiaries, or any other company that they've given series to, let's keep an eye out on outlook for that as well. Commentary on rural growth, RM cost, as well as progress in new categories is something that we're keeping an eye out on.
Thanks, Vinny, but also tracking what's happening with some of the other counters. Look at an RVNL and pull up the intraday chart of that one. That's again suddenly spiked as much as 10%. I think it started off a bit slow after that 70% rally that we have seen in the month gone by. Today it started very slow, but look at the surge again in the last 5-10 minutes itself. And then you have a lot of cement names which are also doing well. We flagged off Ambuja Cement, but to add to that, Shree Cement, Ultratech Cement, all of these counters are also buzzing in the trading session. Nuresh, your take on the likes of RVNL and any other cement name that you like? Nuresh, you'll have to unmute yourself.
I'll skip on RVNL. The stock has moved up from 80 to 140. The risk rewards are off. Overbought in the short term. A lot of speculation going on, so it's a pass. Cements is interesting. We are starting to see a lot of cement stocks come very close to their breakout points. So first is Ramco Cements, which is close to a breakout. Second is Ambuja Cements, which has resistance around 400 for the last 3-4 months. That is being taken out. So I would go with Ramco Cements and Ambuja Cements in the cement pack. Ultratech also continues to hold on well, but I think there's a lot of upside in names like Ramco, Ambuja, even something like a smaller name, Birla Corporation, etc.
Okay, so those are the top names that are making it to the list when it comes to the entire cement space. Pashupati, your take regarding railway stocks, and this is a discussion we have been having every day ad nauseum because the stocks have just been on a tear. Does it make for a good fundamental buy, or is it just believe one of those trading favorites suddenly?
No, I think RVNL has got a very interesting interesting contract that it signed. And basically, RVNL is an asset-light company that basically subcontracts everything. But they've got this huge contract to make these, what do they call these trains, these new trains. And they bid for them. They've got the contract. It's a huge contract. It's about, I think it's working out to 58,000 crores or something is the number I heard over a period of 25, 30 years. And, they're definitely going to be a player, and they've already got the party in place that's going to make these things. And so, it's all good. So they're making their profit, and that's probably the reason why this number is, this stock has gone up, because people are actually doing the back calculation and saying, they seem to be making a lot of money out of this. So let's see what happens. But, again, contract could get cancelled, then what? But I don't think it's going to get cancelled in this case. So,
Today, of course, most of these names, as has been the case for almost 7 to 8 months now, these stocks have really been a buzz, and RVNL as well, spiking up quite a fair bit, as is IRFC. Pashupati, great to have you on the show. We'll let you go on that note. Thanks for taking out the time. 18,165 currently on the index on last count. Let's get in some closing ideas as well. Naresh, on your list?
So that would be a buy on Hero MotoCorp. The stock is trying to show a momentum. The recent swing highs are very close to be broken out. So expecting this to take a move in the near term towards 2,700 mark.
It's a buy on Hero MotoCorp. Kunal, what's on your list?
Well, the closing idea is Havells suggesting a buy, I think at 1288, 90 levels where the stock is trading right now. Looks to be a clear breakout on the daily chart. So that's the stock which we look to buy.
Okay, on that note, we're going to take a very quick break. Come right back. We will, of course, be discussing, the last lap of today's trading session. But in the meantime, Kolkata Knight Riders, the players enjoyed some Hyderabadi biryani ahead of their match against Sunrisers Hyderabad. The franchise took to their official Instagram handle to give fans a glimpse of foreign players relishing the famous Hyderabadi delicacy biryani during their time in the city.
Outcome as a percentage. The number of customers using digital as their primary mode of engagement continues to be growing. On the back of that, almost 90% of our transactions are digital. We live and work by our philosophy of digital at the fore, human at the core, and most of our initiatives have been industry leading. So let me just pause here. It suffices to say the ROA and ROE, in addition to profit growth, have been at an all-time high. So let me just pause here, and me and the senior team are around to take questions.
Thank you, sir, for sharing the highlights of the results.
Okay, we will cut across to the Federal Bank management call in just a bit, but Federal Bank, just to put it into perspective, the stock pretty much is at the day's lows. To think of it, it actually went into its earnings as well weak, because yesterday as well, I recall, the stock was down about 2.5% or so, started off quiet, and since then it's only tumbled quite a fair bit. In fact, for the last 7 days, it's been on the weak footing, down about almost 4.25%. And today, of course, right now as we speak, it's down a good 8.25%. The NIM that they have guided to clearly has moderated, and the guidance was, remember, 3.35% going into FY24 anyway. So maybe a 5 bips of a surprise is what they've, incurred this time around. Slippages, of course, have come in higher, both on a sequential as well as on a year-on-year basis. The agri slippage has doubled for them on a sequential basis as we speak for this particular quarter. The NIMs have come in at 3.31% for this quarter versus 3.5% on a sequential basis. The net interest income as well has fallen short of what the market was anticipating. The market was working with a 2,000 odd crore rupee figure. About 1,900 is what they have clocked. Rajat Sharma too joins in on the show right now. Rajat, hi, afternoon. Good to have you on ET now. Just wondering whether you've analysed any of these earnings. Of course, the MSCI news about HDFC twins, and then numbers from a federal bank, or for that matter, why IndusInd Bank may be falling the way it is right now.
Hi, good afternoon. Actually, I was looking at the federal bank numbers, and to be honest, I've not really seen anything so far which points to why. The stock would fall 7%. To me, everything looks pretty great. The NPAs have reduced. Profit is highest in historically that they've made in any quarter. So I'll have to look deeply at the numbers. Obviously, these numbers have come back just an hour back. But the other bank which I've analyzed, which I've had in my portfolio, was IDFC First, and I think there also you saw 15% drop in.
Rajat, sorry to interject. I think we have you on a patchy line. We'll try and reconnect that. In the meantime, let's listen into the commentary coming in from Federal Bank, because they're fielding questions from analysts as to what went wrong this quarter.
Aided by the fact that many of them are going ahead with the capex cycle, because most of the sectors and industries people are operating in is at 75 to 85% capacity utilization. So that is one part which is kicking in. Plus the initiatives taken by the government of India, Make in India, or the PLI schemes, is also prompting corporates to go ahead with that. So we do see a large amount of capex coming in, and along with that, heightened level of activity, which will require more working capital requirements. So we do see a robust pipeline ahead.
Yeah.
Okay, so we have one question from Shayan Ghosh of Mint in the chat box. What is your outlook on NIMs and deposit repricing already started taking effect? Has deposit repricing already started taking effect?
Yeah, I think the quarter that went by, that was very, very evident, right? We had, when we declared our Q3 numbers, we had very categorically mentioned that the NIMs will be somewhere around 335 for FY24. And we believe that between 330, 335 is where we will be. The deposit repricing is pretty much in the numbers for FY23 last quarter. We saw 55 basis point increase in deposits and yield on advances moving about 35, 36 basis points. And that was evident in the NIM difference between Q3 and Q4. I think it's more or less fully in the mix. There may be some residual impact in Q1 of FY24, and we think the guidance we've been giving in terms of NIMs between 330, 335 is our operating band.
Okay, let's continue our conversation with Rajat. He's back with us. Rajat, wanted your take regarding the banking names that you were talking about. You were talking about some of the names that you hold in your portfolio.
Yeah, no, so I was saying it's too early for me to analyze federal bank numbers, although this stock is, I have it in my portfolio, but it prima facie, it looks like the loan book has not grown, as much as it has for some of the other banks, because the NPAs have come down. The net profit is the highest that they've reported. So, as I said, I'll probably pick this up in the next chat we have. But yes, the other bank that I've been tracking very carefully, which I've recommended on your show many times, is IDFC First Bank, and I think that bank right now looks like the strongest bank in the entire private sector banking space. You can't really compare it with like an HDFC or an ICICI because of its size. But there the NPAs have come down around 15% to 0.86. Valuation-wise, it's available at a valuation of 16, versus something like a 20 for HDFC and other larger banks. And I've said this many times. I really like these smaller banks, whether it's IDFC First with a market cap of 44,000 crore. these days it's moving fairly fast, and even Federal Bank, but I'll have to look at the results for that. Other than that, I think HDFC and Bajaj Finance, they've also posted very good results, around 30% increase on both, and in both the gross revenue and the net profit. But again, I think these are enigmas. The way interest rates have moved up in the last 12 to 14 months, we've seen a 60% rise in interest rates. From 4%, the repo rate has moved to 6.5. Personally, my view is going forward in the next 3-4 quarters, you will see the impact of that. The disbursals will get slower, and the offtake of loans will get slower, and that's the intention. That's why interest rates are raised. So I'm a little negative on the banking space in general and large banks in particular. But yes, both these banks, Federal Bank, which has reported numbers today, and IDFC First, I have both of these in my portfolio. I would be looking to add more if the price corrects. And again, Federal Bank just reported numbers. I'll have to look at it more carefully.
Rajat, what are the other prominent names that you've added in your portfolio of late? Which areas, which sector, which stocks?
Yeah, two stocks that we've added. So first of all, we've had a great year holding stocks in FMCG space, and ITC was one of the top picks. ONGC was one of the top picks, and I recommended both these stocks the last time I was there. Since then, not much has changed in our portfolio. Of course, we've had a great run. Two stocks that we've added in March and April, and we're continuing to add this with the incremental flows we have. One is Hero MotoCorp, which posted its results yesterday. Their quarter-on-quarter net profit rose 37%. Overall net profit for the year rose 18%. They've declared a dividend of around 35 rupees, which takes the overall dividend to 100. That's like, you're getting a franchise like Hero Moto at a dividend yield of 4% at the current price. And the reason why it's been struggling the last 4-5 years is first, there was a lockdown on account of COVID. The sales were low, and then they were late in entering the EV space. And to be honest, they've still not really entered it in any meaningful way. But they've done a tie-up with Zero, the company Zero from California, and they're getting into electric motorcycles. And from January, they've started sales of their electric scooter Vida. So I'm hoping. Because they have one of the biggest distribution networks, and they plan to reach 100 plus cities, as the management said yesterday. So the price at which you're getting it right now, I'm pretty sure they can compete against all these new entrants, whether it's Ola or Honda. Ather, they themselves have a 34% odd stake. So that's one stock that we've added to our portfolio. The other is Lupin, and again, just like Hero Moto, a lot of people might find this stock a little boring because it's, again, not done anything. It's available. 2015, the stock was trading at 2100 plus, and today it's at 710, and there are no takers. But what's turned around for the company is that, in the last 2-3 quarters, the company has turned from, a loss-making company to, profits. They've again started reporting profits, which are growing. Mind you, the company is reporting its numbers on Monday, and I expect any number where the profitability, net profit is about 158 crores or so, 10 to 15% jump will be very good. But the key metric to look out for would be the overall revenue, which is the gross sales, which is the top line. Because why this company has struggled is regulatory environment has been not very favorable after COVID, and they've received number of US FDA warnings for all their manufacturing facilities. I've just done an article which I've published on my website where we've listed how many warnings they have received, but this seems to be cooling off. 36% of their revenue comes from the US, so it's a big market, but it seems to be cooling off. At US FDA has, about a few days back, 3 weeks back, they've given them approval of one of their new medicines, I think, Brexpiprazole, which is manufactured at the same unit against which they received all these US FDA warnings last, the unit. So I'm fairly positive that the company is taking steps to address these problems, and since it's turning profitable, it's available right now at very, very attractive valuations. So, and it's still the 7th largest generic company in the world. So it's a perfect example of a company which is available for external reasons, for reasons beyond their control. Stock price has fallen. It's sentimentally weak, out of flavor. this is a great time to buy stocks like that.
So, Kunal, are you seeing any movement of any sort on Nifty Pharma?
Well, yeah, I would be bullish on actually Nifty Pharma. I think most of the stocks and constituents within the pharma index, they're actually showing signs of very strong turnaround. Now, let's look at the case for the big underperformers in 2022. Dr. Reddy, DV Slab, these stocks have made very good comeback for themselves in the last 6 months, 1 year or 3 months in their respective time frames. Dr. Reddy, I think, has had 1 point pause, just about in nudging distance of breaking past about the 5,000 mark. DV Slab has come back towards 3,300, 3,350 levels from 2,800 mark in the month of February. Then you have the likes of Zydus, Glenmark Pharma, which are looking attractive. Cipla has managed to come back from 860 levels to I think 925, 930 levels the last I had seen. So many of these large cap names which are actually beaten down significantly in the last 6 months, 1 year. Biocon is the other example from I think sub 200 levels now to almost 240, 245. So a lot of these stocks are showing signs of recovery. The laggards or the underperformers are showing signs of recovery. The stronger ones are still showing signs of stability for themselves. And I think that's a very good sign for the pharma index. And the move which we've seen for the entire pharma index in the last 2-3 months and the kind of jump in the RSI which we've spotted on the daily charts is interesting. And this, the last time I think this kind of a jump happened for the RSI was almost in 2020 second half, where most of the pharma stocks not just got into a momentum, but they went into a multi-month uptrend. So I would sense something similar for the pharma index. Not a major kind of an upward trend like in 2020, but I think an upward trend which could sustain as well as grow from current levels.
Okay, so that's a take coming in as far as some of the pharma names and pharma stock is concerned. Naresh, I also wanted your take regarding Paytm. The company will come out with its earnings later today. So, of course, that will be the news flow to track come Monday morning. But any strategy on the counter or any other new age tech company?
So in new age tech, it's very clear a few names which have made a classical bottoming out formations. One is Zomato, another is PB Fintech, and one this Paytm. So if you look at Paytm, the stock made a bottom around say 520 in last year March. Again went lower to around 440 in November, December of last year, and has been sideways for quite some time. The stock was at 650, 700 back in 2021 as well. So base has been made. Today also the stock has made a little bit of a price move. The recent swing high is closer to that 700, 730 mark. Once that crosses, that would be a confirmation of stronger momentum. But overall, it's a buy on dips. A medium-term outlook is that the stock has bottomed out and could be in a slow and steady uptrend. Zomato also from this 50, 55 mark has moved up to 65. 70, 75 could be a short-term target. Post that it gets into a slower and steady momentum. So these three names have made classical bottoming out formations, good 12 months, 6 to 12 months of consolidation. And now the trend seems to be reversing. So this is a good basket to go. Rest of the names like Nykaa, etc. are still away from bottoming out.
Right. Rajat, I don't know what's your own opinion on this entire so-called new age tech, platform cluster.
Yeah, I've stayed away from these. In fact, for at least 2 or 3 out of these 5, 6 new age tech stocks that got listed, be it Zomato, PB Fintech, Paytm, Nykaa, I had categorically even before the IPO said that these stocks will struggle. In fact, Paytm was interesting. I was going on many shows and saying we are getting a secondary market sales demand for Paytm when it was listing at 2,100, meaning thereby that a day before the listing, we had some large investors who wanted to sell before it gets listed at 2,000, 1,900. That was the sentiment that we were seeing. I have no idea how this company even got listed at that price.
We got you on an extremely bad line. We'll let you go on that note. You have a good weekend. In the meantime, let's just close in on where the equity markets are headed. 18,121. So we're pretty much at the session lows. It's almost a 200-point fall that you're seeing on the index as we speak right now. Innocent, HDFC, HDFC Bank, Tata Steel, they're all weighing heavy. Even Bajaj Finance, the big mover from yesterday, is down 1.25% as we speak right now in trade. Let's get in some BTST trades then going. Naresh, on your list?
This is a buy on Indian Energy Exchange, IEX. The stock has given a flag breakout. The stop loss at 157 and the target price of 165. Second is a buy on Hero MotoCorp. The stock is trying to make a momentum move above the 25, 50, 60 mark. Could see a follow-up move going forward. Stop loss at 25.20, target price of 26.20.
What about you, Kunal? What are you strategizing as a BTSC trade?
So focusing on pharma stocks, Glenmark Pharma is something which I would recommend as a buy. Interesting chart, and I think the near-term trends are also very, very strong. So buy with a target of 575, stop loss at 536. The target and the stop loss needs to be reversed. On the upside, Metropolis is the other stock which I would recommend as a buy. 1335 is the target. Seems like a fresh breakout candidate for Metropolis, and stop loss at 1260.
Thanks, Kunal, for that. We'll get that corrected as far as the target and stop loss is concerned. But Kunal, our take as far as the overall market is concerned continues to drag down at the lowest, lowest end of the trading session, and no buying on dips today.
Yeah, no buy on dips for the markets, and I think majority of the selling is actually because of how the banks have shaped up. And I think as I was mentioning at the start of the show, that there has been consistent selling for these large cap, mid cap, and the private sector as well as the PSU banking names throughout the day. And that generally happens when there is a strong institutional kind of an action that really, I think, could play a bit of a spoil sport for the Bank Nifty over the very near term. So I think traders should not now be in a hurry just because the banking index has fallen by 1,000 points, and then if you're playing for 200-point recovery, that may actually not be a good strategy. So it's better to wait out, let this this slide settle into the banking stocks, respective banking names, and then I think take a call whether to go long or to short.
Right, okay, let's see where else is trade headed. And it seems like today we are a standalone case of a fall, considering yesterday we were the standalone winners across the world markets, because the problem seems very India specific. I was just looking at the Asian screen. Shanghai, yes, was down about 0.5%, but the rest of the markets did marginally okay. Europe actually has started off on a strong footing, about a 0.6%, which equates to a 100-point gain for DAX. FTSE is marginally higher. CAC as well is in the green. FTSE MIB, in fact, is seeing a rip-roaring 300-point move, about a 2% move coming in there. And stock 600 as well is marginally higher. It's only an India-specific move that you're seeing today, which is that weak. Even the US pre-futures are looking very strong, actually, about a 100-point move on the Dow, 0.5% higher for S&P futures, NASDAQ futures, over a 0.5% gain. So it's pretty India-specific in that sense. And, if you were to really take out the contribution list, it's largely HDFC, HDFC Bank, which, by the way, on the futures are now down almost 6% for HDFC Bank. Similar price action for HDFC as well. And IndusInd too, which has lost a good 5%. So these three stocks alone, Kunal, I guess, would be the maximum weightage on Nifty Bank and weighing heavy on the index too.
Well, absolutely. I think you hit the nail perfectly, because most of the banking names which you mentioned rightly, SBI, HDFC Bank, IndusInd Bank, etc. In fact, SBI in the mid session was actually into a positive territory, and that stock took a almost like a U-turn from its intraday high. So that's why I said that it's one of the major reasons why you're seeing some sudden pressure on the indices. But I think it's as I said, that you should not be in a hurry to try and buy these dips just because the banking stocks and the Bank Nifty is fallen by 1,000 points. I'll wait for at least a couple of days before initiating a contra buy.
Yeah, the sole winner today is ICICI Bank. That's still holding up by about 0.7%, although it was a significant mover when we came into trade. And at one point in time, it was almost higher by, I think, 2% or so, if I'm not mistaken, and was the biggest mover on the index. That also has cooled off considerably from the day's top, but still latching on to the green somehow. So Beta PNB, IDFC First, Federal Bank has now lost 9.25%, City Union Bank, BOB, RBL, Bandhan Bank, SBI, which has seen a fair amount of, a drawdown from the session highs, AU Bank, Axis marginally in the red. They're all a deep gash there. And so is Kotak Bank, which is down about 1.25%. So clearly today it's single-handedly been banks led by, some of these names which have seen the maximum weakness in trade. What else has been weak?